Hey guys, how are you? Andy Sukhu, founder and CEO of Y2K Credit Solutions. We're back. Another episode of What Now? This is a very important topic actually. I'm pumped about this topic because everyone wants to live the American dream. The real estate market is booming. Sellers are making tons of money. Buyers are able to purchase their first home, their second home, their third home. Buyers are able to reap the benefits of having their first home and refining, pulling their money out, parking in another property, putting some in savings, lower interest rate. A lot's going on in the real estate market. A lot's going on. So, a lot of clients fix their credit and they come to our office to fix their credit because they want to purchase their first home, second, third, whatever it may be. Point is, they want to live the American dream. And we're here to make that dream become a reality for them, right? So, what now? Now that you have your credit fixed, you have a good credit score, you have good credit cards, score strong, you have a job, you got a pre-approval, you want to purchase a property. Here's the thing. And these are a couple steps you need to have in place and things you want to make sure that you have under control before you go into the whole mortgage process, right? One thing you want to make sure is have your financials in order. You want to make sure you have your 30 days W-2, that's pay stubs. You want to have 2 years tax return, very important. Some places may do 1 year if you're self-employed, but 2 years is the norm for FHA. A lot of you guys do FHAs, right? One thing you want to make sure is when under financial or in orders, make sure you don't have a lot of debt, a lot of credit card debt, because that can affect your buying power, okay? That can affect how much you can get approval for, because they're going to calculate your monthly payments into your mortgage. So let's say you make $3,000 a month income. That's after tax. Let's say you have $1,500 worth of payments in credit cards, auto loans, student loans, personal loans, whatever loans you have. It comes up to, so now you're going to minus the $1,500 from the $3,000. Now it leaves you with $1,500 available, right? Well, I mean, if you get a mortgage for $300,000, the payment's not going to be $1,500, right? So, you want to make sure you don't have a lot of debt, a lot of credit card debts, loans, and you want to make sure you pay this off or bring it down to something controllable or low, close to zero, before you get your mortgage approval, so they don't hit you with a high interest rate. Right? Always remember this, guys. Higher the score, the lower the interest rate is. Lower the score, the higher the rate is. I always tell my clients, you want to make sure you go into the deal right off the rip with a good credit score. Next thing, do you have enough money saved? Now, for example, I have a scenario here. These days you can buy a home for next to nothing, even with 3.5 down, right? FHA. On a $300,000 mortgage, you need 10.5. A lot of you can be like, oh, I have that saved up already. I can get a home. No. You're not forgetting that you need to have money for closing costs. That varies state by state. You need to have homeowners insurance, taxes. Now you buy a house, you have to do repairs. If not, you're going to be sitting in this house that you just purchased looking at someone's ugly paint and rusty looking bathroom that you want to change, but you don't have additional money to fix. Now here's one thing I want you guys to realize. I'm going to say this very clearly, and I say this based on my personal experience, a lot of friends in the industry, in the real estate market. Guys, material is expensive and it's rare. There's not a lot of commodity out there. I know a lot of contractors that are doing work. Materials are backlogged. I know a lot of home buyers that are trying to finish their home. They can't even get lumber to finish their home. Guys, it's expensive. And everything has gone up and there's limited quantities available. So you want to make sure you have money for all this. So yeah, you may have $10,500 saved up for your down payment, but this right here could be another $20,000. Closing costs, insurance, tax. It could be another $20,000. You want to make sure you have all that in play, saved up before you go get your mortgage approval. All right, guys? So These are honestly the major things you need to worry about when purchasing a home. And you want to make sure you have reserves, guys. You want to have reserves. Reserves is very important. I tell my clients you need to have 6 months reserve, or even good credit or credit card with high balances to bail you out. Because listen, guys, you end up in a situation, nobody's going to bail you out. You got to bail yourself out. It's not the mortgage company that's going to bail you out, not the realtor. It's all up to you. It's an amazing thing to own your home and live the American dream, but it gets costly at the same time. You need to make sure that you prepare yourself, guys. So, guys, this video is going to be on our YouTube channel. Check it out. Share it. Like it. If you know someone that's in the market of purchasing their first home and, they just need a little refresher of what things that they need to have, the checklist, share this video because these are like main topics. All right. Talk to you guys soon. Have a great day.